Torsten Slok of Deutsche Bank made some comments this morning in a Bloomberg News article. He said we talk so much about seeing the whites of their eyes when it comes to inflation, but definitionally, do we know what whites of their eyes is? What's the number that you look to? Is it
the answer to that question is we don't know. And so I'm going to be point blank and honest with you. I think a lot of economists would say once you get near the 2% number, you're at that threshold. When I look at the CPI numbers, for example, I'm looking at a lot of the major components. And there are really just two components of the CPI that's driving all of the increase that we're seeing. It's homeowners equivalent rent and it's health care, both of which are actually subtracting from purchasing power, which is one of the reasons why this economy is downshifted instead of upshifting as the labor market is signaling to the Fed. I think the Fed is actually looking at the wrong indicators, to be honest with you.
Well, interestingly enough, we're going to start getting higher inflation for a third reason, and that's because oil prices are going up. I brought a chart along here that shows the relationship between the PCE index, which is what the Fed follows, and oil prices, and it's basically 1-to-1. I mean, you look at the, you go to the terminal and look at the chart here. You've got West Texas Intermediate dropping last year and now starting to rise again, and you see inflation starting to rise along with it.
Yeah, and it's interesting because really, I mean, this is not the good inflation, if you like. There's good inflation and bad inflation, Michael. So, and we have the chart here. It's 4229 in the chart library.
There we go.
Yeah, exactly. So talk to us about whether this will be good for the economy or not necessarily yet.
Well, in a funny way, it's neither here nor there. The Fed has been looking past oil-based inflation, energy-based inflation at the core rate, but they have a target that is the headline rate. So if the target rate starts to get higher by 2%, now they will look at efforts, at ways it feeds through into the core rate, and whether that continues to push it up. But core is already above 2%. So they're almost there, and this is why they expect to get there on inflation.
I want to ask you, Steve, about the lack of unanimity we're seeing now among policymakers. We get these minutes today. We should get some more color on the contours of the conversation that they were having last month. What are you going to be looking for in terms of what participants said, what voting members and non-voting members had to say about rate increases?
Well, I think the concentration between what you'd call the domestic group and the international group. The domestic group is all going through exactly what Michael's been talking about in terms of this is the base effect that you're going to have on oil prices. This is the effect you're having from the labor market. Then there's a whole other cast of characters that's looking at the overall situation from a global perspective and saying, look, we live in a world of excess supply. There is no sustainable upward movement in inflation anywhere in the world. We may not get it here. And we run the risk that if we tighten and make a mistake here, we can import deflation. And we have to remember we're the largest net debtor in the world, so it's really painful if we moved into deflation. Japan was the largest net creditor. They've been able to deal with deflation for 25 years. We don't have that luxury. So really, I think if the Federal Reserve makes the mistake of tightening again, and I think they will make the mistake, I think it will prove to be an incorrect decision. I think the dollar will firm even more on the backdrop of that. I think import prices will come down. And I think once we get through the base effects on oil prices, we'll be looking at a fact that we'll see wages and salaries turn over, and we'll be right back where we were.
Steve, you think that the Fed needs to wait till 2017 to raise?
I actually think at this point, if they don't do it this year, they're not going to get it done in 2017. I actually would bet that the move they're going to do probably in December of this year will be the last one we'll see for at least 12 months plus.